only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star 10 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anuj Sonpal from Valorem Advisors. Thank you, and over to you, Mr. Sonpal.
Thank you. Good evening, everybody, and a very warm welcome to you all. I'm wishing everybody a happy Diwali and happy New Year as well. My name is Anuj Sonpal from Valorem Advisors. We represent the investor relations of Yatra Online Limited. On behalf of the company, I'd like to thank you for participating in the company's earnings call for the second quarter of financial year 2024. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risks and uncertainties which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now, let me introduce you to the management participating with us in today's earnings call and hand it over to them for opening remarks. We firstly have with us Mr. Dhruv Shringi, Whole-Time Director and Chief Executive Officer, Mr. Rohan Mittal, Group Chief Financial Officer, and Mr. Manish Hemrajani, Vice President of Corporate Development and Investor Relations of Yatra Online Inc. Without any further delay, I request Mr. Dhruv Shringi to start with his opening remarks. Thank you, and over to you, sir.
Thank you, Anuj. Good evening, everyone, and thank you for joining us for our second quarter earnings call. It's my pleasure to share that for the third consecutive quarter, we've successfully expanded our market share in the air travel sector. In the second quarter of 2024, our air passenger bookings surged by 31% year-over-year, surpassing the industry's growth rate of 23%. This not only underscores the Yatra brand's resilience, but also highlights our competitive edge in capturing market share. International travel has also shown a steady improvement during the quarter ending September 30th, 2023, reaching approximately 90% of pre-COVID levels. As we move forward, we remain optimistic and committed to leveraging these positive trends to drive further growth and success. In the corporate travel sector, we further strengthened our position by securing 13 new corporate accounts in the September quarter. These accounts carry a potential annual billing of about INR 813 million, reflecting our platform's capability and leadership in the market. Beyond the quarter, we've continued our momentum, closing deals with significant clients like Wellspun and a major multinational corporation, wherein we will manage their travel needs across various regions in Asia, further expanding our influence and operational footprint. According to the International Monetary Fund, global inflation is projected to gradually decrease from 8.7% in 2022 to 6.9% in 2023 and further to 5.8% in 2024. This trend is attributed to the implementation of tighter monetary policies and the stabilization of international commodity prices. Amid this backdrop of softening inflation, India's economic landscape remains particularly robust, buoyed by a significant public capital expenditure initiative and a strong domestic economy. The Indian economy is poised for consistent growth, with projections estimating a 6.3% increase for both 2023 and 2024. This positive trajectory underscores the resilience and dynamic nature of our economy. Travel does tend to be closely linked to the growth in GDP. And over the past decade, we've seen travel grow at anywhere between 1.5x to 2x of GDP growth. And this growth rate of 6.3% hence bodes very well for the overall travel industry. India's per capita GDP has also witnessed an extraordinary growth trajectory. The same increase in GDP per capita that required for 4 decades to achieve a 5-fold increase from 1960 to 2000 has been replaced in just 2 decades from 2000 to 2022, growing at a compound annual growth rate of 25%. This surge in per capita income is a key driver for heightened discretionary spends, with travel and dining out emerging as the primary beneficiaries. Amidst this landscape of an accelerating rise in discretionary income, we are confident in our potential to surpass market growth rates. Our strategy to capture a greater share in the corporate travel market coupled with the sustained strength of the consumer market, positions us well for continued expansion and success. Let me now provide you with some more details on our second quarter results. Our revenue for the quarter ended September 30th, 2023 were reported at 94.1 crores, up 14% year-over-year. EBITDA for the quarter was a negative 5.9 crores. However, excluding the one-time cost of INR 16.6 crores pertaining to the IPO, related listing fees and ESOPs in the second quarter of FY24, adjusted EBITDA reached INR 10.6 crores. Further, adjusted for these one-time consolidation costs, PBT would have amounted to INR 3.29 million for the second quarter. Gross bookings were up 10.2% year-over-year to INR 17,504 million, or approximately 1,750 crores. This was despite air ticket prices being lower by 14.7% versus the same period last year. Moving on to further details of the quarter. The corporate segment was somewhat impacted in the September quarter with softness in travel spend in the IT and ITES sector. We are confident, however, of a recovery in the near term from our largest contributing sector as IT. In addition to, the newer business that we have won, we expect that the new business that we have won will, by the first quarter of calendar year 2024, offset the drop that we have seen on account of the IT/ITES segment business trends being low. On the hotel front, revenue from our hotels and packages business was INR 36.6 crores in the 3 months ended September 30th, 2023, as compared to INR 26.7 crores in the 3 months ended September 30th, 2022, reflecting an increase of 37% year-over-year. The increase in revenue is on account of a recovery in domestic travel, along with addition of new distribution partners and a focus on selling better quality hotels aimed at business travelers. From a competitive standpoint, the intensity has remained stable from the last quarter and remains manageable overall. With a positive macro backdrop and given the ongoing recovery in corporate and leisure travel and the rise in discretionary spending, and now a significantly bolstered balance sheet, we believe we are poised for a strong FY24 and FY25. Aside from seasonality, we expect our results to benefit from accelerating growth in both our corporate business and consumer business as we continue to add to our formidable blue-chip customer base and leverage the strength of our brand. Just to reiterate, today Yatra India serves 1 out of every 4 of the top 100 listed companies in India, 3 of the big 4 accounting firms, and 3 of the top 5 technology companies in India. These results reflect our last quarter as a private company. Given the stronger balance sheet following the IPO, we have begun to see early signs of improving supplier margins in the current quarter and expect to see this further gain momentum in the quarters to come and have a meaningful positive impact on our operating performance in the subsequent quarters. In addition, we have also seen the positive rub-off of the IPO and a stronger balance sheet in one of the large corporate discussions, which has had a favorable outcome for Yatra, and we expect to see more of these in the quarters to come. With these positive tailwinds, we expect our operating performance to continue to improve quarter on quarter in the near term and expect to deliver a PAT in excess of INR 20 crores by Q1 of FY25, which is the April, May, June quarter of 2024. With that, let me hand it over to Rohan to walk you through the details of the financial performance. Rohan?
Thank you, Dhruv. I will now review our Q2 numbers for the quarter ended September 30th, 2023. As mentioned, our gross bookings for the quarter were higher by 10% on a YOY basis to 17.5 billion. Both air and hotels and packages segments grew by 12% on a YOY basis respectively during this period. For the September quarter, our revenue from operations grew by 14% to INR 941 million as the travel demand continues to sustain through. The adjusted margin from air ticketing business was lower by about 5% on a YOY basis to INR 1 billion. This was due to limited access to airline deals which should improve over the next few quarters. The adjusted margin from hotel and package business increased by 16% on a YY basis to INR 280 million. This was on account of higher room nights as well as access to better distribution partners. The total adjusted margin from all these three segments remains flat. The adjusted margin from other services increased by 18% YY to INR 49 million, as our other travel service offerings continue to gain momentum. Moving to expenses, Q2 marketing and sales promotion expenses, including customer promotions and loyalty program costs, increased by 4% on a YY basis to INR 832 million. This increment is lower than the overall TTV increment of 10%. Our personal expenses, excluding share-based payment expenses, increased by about 11% YY, primarily on account of the annual increment cycle. Payment gateway costs as a percentage of total TTV continue to remain range-bound. Other expenses reduced by 23% on a YY basis due to better operating leverage as well as improvements in working capital management. In Q2, we've completed the cost accounting of IPO expenses and taken a one-time charge of 68 million INR. My apologies. The adjusted EBITDA stands at 106 million INR as compared to 140 million in the quarter ended September 22. Our gross debt at the end of 30th September was at 1.74 billion INR, while the cash and cash equivalents and term deposits on our balance sheet were INR 6.44 billion, which reflects the proceeds from our recent IPO as well. With this, I'll hand it back to Anuj to conclude the prepared remarks. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Harshil Shetia from AUM Fund Advisors LLP. Please go ahead.
Hello, sir. Hello.
Yes, Mr. Harshil, may we request you to use your handset and you can go ahead.
Hello. Is it audible now?
Yes, sir. Please go ahead.
Sir, in the initial comments you mentioned that we should be on a PAT trajectory of upwards of 25 crores from Q1-25. So what gives us the confidence for such kind of a guidance?
So just to clarify, firstly I said 20 crores, 20,
okay,
just to be abundantly clear, right? And what gives us the confidence in being able to get to that is the discussions that we've been having with suppliers in terms of improving margins and the pipeline that we have on the corporate customer base in terms of implementation. We also expect recovery in the sense of the ITES sector, which is one of the largest sectors for us in terms of business travel, by the first quarter of next fiscal year. So these are the three factors which give us, the confidence that, we should be on a path to achieving that number.
So is it possible if you can quantify, so what kind of improvement in margins do you see on the supplier end?
So these are evolving discussions at this point, right? We are getting early trends and indications. As I said, it's now about 45 days since the IPO. So it's still work in progress. Maybe by the end of this quarter, we'll be able to give you more definitive trends on that.
Okay. Thank you. That's it from me.
Sure.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. A reminder to all participants, you may press star and one to ask a question. A reminder to all participants, you may press star and one to ask a question. Our next question is from the line of Nitin Padmanabhan from Investec. Please go ahead.
Yeah, hi, good evening. Just wanted your thoughts on air ticketing. Do you believe that if you could give some context on air ticket prices, that is down 14% year on year, and how should one think about from an industry perspective in terms of how it will evolve on a going forward basis, and what trends will sort of support that sort of metric?
Sure, Nitin. Hi. Nitin, in terms of the year-over-year drop, the vast part of the drop is coming in international airfares, as we've seen incremental capacity being deployed by the airlines over the course of the last 12 months, especially the international airlines. We also expect new capacity to be added by some of the Indian carriers on the international routes. Especially, we've seen Indigo being very active in terms of deploying capacity on the short-haul routes. And we've been given to understand from Air India that they will start deploying incremental capacity on the international routes by the early part of 2024. So on the international side, I would still expect prices to come down maybe to the tune of about 5% more from where they are. So the big drop has already got factored in from last year to current year. I don't see too much further headroom beyond a 5% kind of drop on the international side. On the domestic front, we expect prices to remain where they are currently and maybe go up in the low single-digit range.
Sure. And what proportion of our air travel ticketing would be international, roughly, on a broad basis?
So approximately in total ticketing value, it would be close to about a 70-30 split, with 70 being domestic and 30 being international.
Sure. Perfect. That's very helpful. Thank you so much and all the best.
Thank you, Nitin.
Thank you. Our next question is from the line of Harshil Shetia from AUM Fund Advisors LLP. Please go ahead.
What I want to understand is what is our current market share and how is it evolving for us in the industry as of now?
So if I look at the overall industry market share, right, our industry market share, and this is looking at domestic flights, right? So of all flights sold in the country, our market share would be close to about between 7 and 8% right now. And given that we are growing at about a 20% faster rate than the industry, we expect to continue to gain market share going forward as well. So we had called out, right, we had a 31% growth. Now 31 is a blended growth, but even the domestic growth was at least 20+% higher than the industry growth rate.
Okay. So secondly, you called out that you're expecting IT or ITES as a segment to recover. How much does it currently contribute to your total top line?
So in terms of our B2B business, about 10% of our B2B business comes from the ITES sector.
Okay. And secondly, you said that, so do you see any cost-cutting exercises which are planning in the next 6 months apart from the savings and finance cost because of the IPO, which will also help in better margins, or is it from straight away on gross level terms, which generally is like 8.5% of the GVR, or that should see an improvement?
So on the cost side, the one cost that we are working towards rationalizing further and renegotiating is on the payment gateway side. So we do expect going forward to see some benefit coming to us in that cost line item. On the other fixed cost, we've anyways done a fair bit of cost cutting on that, but we are working with some of our technology team on initiatives which will help automate back-end processes. But the impact of that comes through, maybe more in the 6 to 12 month kind of time frame as opposed to in the, let's say, in the current fiscal year. So the benefit of that will accrue in the next fiscal year. However, the benefit of the negotiations that we are looking at on the payment gateway side should accrue in the near term.
Okay, so currently the payment gateway charges are around 2%, correct?
On a blended basis, they will be lower because UPI and all attract a much lower charge.
Okay. So credit card would be 2% then.
Credit card also, I mean, I can't disclose actual numbers, but yes, credit cards will be, somewhere in the 160 to 200 bips kind of range.
Okay. So is that the highest or expense?
Yeah, so typically credit cards would be the highest cost, followed by debit card, net banking, and then UPI being the cheapest.
How much is UPI, if you can just throw a ballpark figure?
So today we are getting to almost 25% of our transactions on the B2C side being done using UPI.
And how much charges do we have to pay for the same?
So UPI charges are fairly low. I mean, we are talking about single-digit bips.
Oh, okay.
Mr. Harshal, does that answer your questions?
Yes.
Thank you. Our next question is from the line of Neeraj Vijay Kamtekar from Prosper Rotary. Please go ahead.
Thanks for the opportunity, sir. Am I audible? Hello?
Yes, sir. Please.
Yeah, please go ahead.
Okay. Sir, the company has 280 crore rupees are FD at the rate of 4.8% to 4.9%, which is matured on 5th and 6th of October. So will company maintain the FD at this rate, or will the company park the fund at this rate? Or what is the planning of the company to utilize this fund?
Sure. So on this front, obviously that was a short-term thing done given the timing of the IPO was on the 28th of September. Going forward, obviously the endeavor would be to try and optimize this return and balance it out with risk as well. So we would not be taking a very high-risk approach to this investment from a treasury perspective. However, it's not going to be at a 4% range either.
So, during the short term, can we retire any short term borrowing rather than putting the money into the FD?
No, absolutely. I mean, that is one of the things that we are working towards, and that's currently work in progress.
Okay. My earlier participant has asked the question regarding the payment gateway charge. Can you say that in percentage term to what is the payment gateway charge in percentage term to gross booking revenue?
So in percentage terms to gross booking revenue, payment gateway charge would be in the range of about 60 bips.
Okay. And is there any plan to reduce, because it is one of the major costs for any OTA? So because we attend the other competitors' con call also, and they have also mentioned that they are planning to reduce by using the more and more UPI transaction.
Yeah.
What is our plan to reduce that cost?
So absolutely, like we said, it's being looked at from two levels. One, and sorry, just to correct myself, I think the current number would be closer to 70 bits. At one level, it's about driving down better rates and negotiating hard with our current service providers. And at the other level, it's about changing the mix and driving higher adoption of UPI. So there are incentives, there are small promotions that we continuously run to keep driving utilization and adoption of UPI. So that's one of the key things that we are looking at. And in the long term, our endeavor is to continue to, on an annualized basis, reduce this cost by about 10% by driving better adoption of UPI.
Okay. Will there be any ESOP cost in Q3?
So there will be a much smaller ESOP cost. There was more of a one-time ESOP cost in this. Going forward in Q3 and Q4, we expect ESOP costs to be in line with the earlier trends, which was closer to about 3 crores, in the 3.5 crore range, depending on the US dollar to INR exchange rates.
Okay. And all the best. Thanks from my side. That's all from my side, sir.
Thank you.
Thank you. Our next question is from the line of Manav Vijay from Deep Financial Consultants Private Limited. Please go ahead, sir.
Yes, thank you very much, sir. Am I audible?
Yes, sir. Please go ahead.
Perfect. So thank you. Can you first explain the ESOP cost that we had in this quarter of 10.6 crores? Because I think you had a similar 3 or 4 crores cost in quarter one as well. And this 10.5 crores completely came, I think, as a surprise. If you could explain the rationale for this cost.
Sure. So this is a one-time cost which is there, and these ESOPs were granted on account of, they're more linked to the successful completion of the IPO and are a one-time cost only. Going forward, we'll again be back to the pre-IPO levels and this quarter level of around 3.5 crores a quarter.
Okay. So no more one-offs as far as the ESOP cost is concerned. Okay. Second question is regarding the IPO listing fees that we have, I think, incurred in this quarter of roughly 6 crores. I believe that the earlier talk about costing was actually quite high. So if you can just talk how we have been able to reduce from this earlier projected cost to this now 6 crores.
Sure. So from an accounting standpoint, the cost gets put into 3 buckets. One bucket is the cost which is to the selling shareholders for the OFS component. Then there is a bucket that gets knocked off against share premium and goes directly to the balance sheet. And the third is the component which comes into the P&L. If you want to understand the rationale of each one of these from an accounting standpoint, maybe Rohan can elaborate on that as well.
That will be helpful.
So I can take that offline, or do you wish to do that over the call? I'm just conscious of the overall time, nothing else.
So I just want to understand that after recording 6 crores in this quarter, we will not have any costing again in H2.
Absolutely. There is no cost that will come in H2. We've recorded 6 crores in this quarter in the P&L, and there is a further 18.5 crore adjustment that has happened to the securities and premium account in the same quarter. If you look at the balance sheet numbers, or we can help you point that out offline as well, the overall numbers that get accounted for are close to about 32 crores, all in put together, as far as YOL is concerned. Out of the 41 crores total listing fees, and this is all disclosed in the prospectus, out of the total 41 crores, about 9.5 crores was the cost which was attributed to the selling shareholders. So that sits outside the YOL purview. 32 crores got split across the balance sheet and P&L. And I repeat, there is no further cost which will come in H2.
My last question to you is to Dhruv, if you can also just talk about the cash deployment that we will do that with actually the airlines. I think we were supposed to deploy roughly 200 to 250 crores in H2. How that process is coming along?
Sure. So as I touched upon earlier, we've already started discussions with the suppliers, both on the air side and on the hotel side, for deployment of capital to boost margin. And those conversations are progressing well. But it's relatively early days on that, right? It's only, as I said, 45 days. Some part of that capital, that the number that you're mentioning, has already been deployed. Right, and by the end of this quarter, we'll be able to give you a much better sense of how that's playing out. But as of today, the conversations are progressing well.
Okay. That's all from my side. Thank you and all the best.
Sure.
Thank you. Ladies and gentlemen, a reminder to all participants, you may press star and 1 to ask a question. Next question is from the line of Anmol Garg from DAM Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. had a couple of questions. Firstly, Dhruv, if you can highlight what would be the DSO days in B2B part of the business in 2Q and how has it moved versus 2Q of last year?
So the DSO is trending currently at close to 28 days, and it's pretty much in line. Just the change is only about a day or two. There isn't really a material change in the DSO from then to now.
Sure. And second part to that is that are we planning to renegotiate any of the contracts, particularly so that our DSO days can come down the corporate side of the business?
So on the corporate side, from a contract point of view, the discussions which are happening are to try and move some of the customers onto corporate credit cards, and that then helps bring down the DSO, the weighted average DSO. So there are a couple of conversations which are going on right now with some of our larger customers to migrate them onto a card platform.
Sure. And secondly, if you can highlight any steps taken to further accelerate the hotel business in terms of the exclusive partnerships, or in altogether, if you can give any kind of guidance in the hotel business, more from a medium-term perspective.
Sure. So on the hotel side, there's a lot of interesting stuff that's happening, and all here we are using the strength of our balance sheet as well now to have some of these pricing conversations with a number of hotels. We have identified a core set of hotels running into a few thousand, where we are having these discussions, which will give us, priority pricing, and that then gets cross-sold to our corporate customers. So on the hotel side, I think there's a great opportunity going forward for us because we now have very competitive rates which are coming through from these hotel partners. So wherever the conversations have gotten closed, we've seen that there is a significant pricing advantage that is accruing to us. And this pricing is then allowing us to beat the kind of rates that corporates would have directly negotiated. So we expect, cross-sell on the hotel side to increase meaningfully over the next 2 to 3 quarters as we start leveraging these newer rates that we are getting right now.
Sure. So can we expect that maybe in 1 or 2 years down the line, the current mix will change or will skew more towards hotels?
Absolutely. I think that's something which is definitely going to happen. We will start seeing signs of this within a couple of quarters. As I said, we've got the early signs of the kind of rate advantage that we can get are very encouraging. And on the basis of this, the benchmarking that we are doing with our corporate customers, we are seeing that there is a big rate advantage that will accrue to the corporate customers. So the cross-sell should start gaining a lot of momentum over the coming quarters.
Sure. Yeah, thanks, Dhruv. That's it from my end.
Sure. Thank you.
Thank you. Next question is from the line of Jagdish Sharma, who is an investor. Please go ahead. So maybe move to the next participant. Our next participant is Mr. Neeraj Vijay Kamtekar from Prospero Tree. Please go ahead.
Thanks for the another time opportunity. Sir, I would like to understand that can the company use the available cash to deploy in the way that provide the higher amount to the airlines company and hotel booking as an advance and get the better rate than the competitor, which can turn into the more profitable business for the company? Is it possible?
Yes, that's the margin expansion that we are talking about, and those are the discussions that we are currently having with suppliers.
Okay. Thank you.
Sure.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. Our next question is from the line of Jagdish Sharma, who is an investor. Please go ahead.
Sir, am I audible?
Yes, sir. May we request you to use your handset, sir?
Yes, sir. Now I'm audible?
Yes, sir. Please go ahead.
Sir, just one question on your B2C business. How much B2C business contributes to the overall revenue? And historically, what are the growth rates, profitability of this business?
Sure. So if I look at the B2C business, pre-COVID, B2C business was accounting for roughly about 50% of our gross bookings. In the current scenario, we are now, close to about between 40 and 45% coming from B2B and about 55% to 60% coming from B2C. In terms of historical profitability, in the pre-COVID kind of environment, in the last few quarters before COVID, this business would have been trending at profit margins of the mid to high single digits.
Okay. So how do you see this business scaling up and its profitability? Like any margin improvement in that trend?
See, we expect that some of the supplier negotiations that we are having will have a straight fall-through improvement for both our businesses, corporate and B2C. So we expect margin expansion to happen across the board on account of the better pricing and the better deals.
Okay, so you're expecting that. Okay, so when you say profitability, are you referring to EBITDA or overall profitability?
I'm referring to both EBITDA and then the flow through from EBITDA to PAT is basically just largely depreciation and interest costs. So for me, it will impact both.
It will impact both. Okay. You mentioned mid-teens, right?
Sorry?
You mentioned mid-teens. It is on EBITDA or PAT? You just mentioned mid-teens, right? So it is on EBITDA or PAT?
Mid-teens?
Yeah, you just mentioned the margins will be like mid-teens, right? Yes.
So for B2C business, the margins are in the mid to high single digit, right?
Okay.
And that is EBITDA margins that I'm referring to.
Okay, sir. Okay. Thanks, sir. All the best. Thank you, sir.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Our next question is from the line of Mayur Patwa, who is an investor. Please go ahead.
Yeah, hi. My first question is on the forex business. So, how big is this? And are we only into B2B or we are also into B2C for forex?
So the forex business is still relatively small. It's more about forex which is cross-sold to our corporate customers, but it does offer a further growth opportunity for us. As of today, it's still relatively small in the overall scheme of things. We don't directly have a foreign exchange license, and we partner with a couple of players from whom we source forex for our corporate customers.
So, any plan of obtaining the direct license or going on this segment or?
Yeah, so this is, as I said, one of the other cross-sell opportunities for us. In our prioritization, the top cross-sell opportunity is hotels, and then followed by insurance, visa, and foreign exchange.
Okay. And the second question is, are we also into outbound to outbound? For example, suppose, someone from China wants to, say, travel to Mauritius. So, do we provide that travel solution to them or we are only for the Indian market?
No, we don't do outbound to outbound for leisure travelers. We do outbound to outbound for some of our large corporate customers where we manage their business travel in foreign countries as well from India, but not on the leisure side. For the leisure side, our business is only for Indians who are traveling overseas and for people who are coming in from overseas into India.
Okay. That's it from my side. Thank you.
Sure. Thank you.
Thank you. Ladies and gentlemen, you may press star and 1 to ask a question. A reminder to all participants, you may press star and 1 to ask a question. Ladies and gentlemen, that brings us to the end of our question and answer session. As there are no further questions, I now hand the conference over to the management from Yatra Online Limited for closing comments.
Thank you, Anuj. And I would like to thank everyone for taking out the time today to join us. And I wish all of you a very happy Diwali and a very prosperous coming year. We look forward to interacting with you in the future as well. And thank you for your time once again today.
Thank you. On behalf of Yatra Online Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.